Welcome back to the J22 report. I am your host, Johnnie Market. You all know that drill. Smash that like button, subscribe if you already haven't. And just want to do a little disclaimer. Nothing I say should be construed as financial or investment advice. Just my opinions, thoughts on the markets, and read more about the disclaimer below. And let's get into today's stuff. Markets were flat, buying towards the end. Doesn't look like it's crashing anytime soon. And gold had a big day. And so let's get in the economic data. This will be quick because it's not really that much. But as you can tell, it's same sort of mixed stuff. Empire Manufacturing Index that actually went up way before the consensus, 570. It was supposed to be, negative. And then if you look at it, the housing market index, which is basically like the selling conditions, it's in contraction, 42 instead of 47. So not a good time to buy. But in terms of the market, I don't expect a big decline that much anymore because if you look at the fear and greed index, this is more sentiment. This is neutral. This is important. I'm going to try to incorporate it more often. But if you look at it, fear, fear, fear. There was greed, but extreme greed is when people, any type of big decline, in my opinion. So look at it, it's neutral. Stock market, still a lot of fear. So this can go on the upside. Stock market breadth. Put call options. Extreme greed. So, but yeah, it's neutral, safe haven, junk bond demand. This is one of the bubbles, junk bonds. So, but fear and greed's neutral, so I don't see any really decline anytime. I like to see it around extreme greed. So we'll get rid of that. But in terms of the economy, one to talk is America's pastime, and I'll just say it's my favorite pro sport to watch. If you don't like baseball, you don't like America. Anyway, Scott Boras, who is known as a greed agent and likes to milk teams just in case, calls out lack of spending by much of the MLB. And this is big, and I think this shows how bad the economy is, personally. And a lot of people will talk about the Yankees, New York, and their spending. But a lot of teams aren't spending, and a lot of those teams, because the cities are struggling. And baseball's not like football. The NFL, it's all about big contracts. I don't watch it, but big TV contracts. Same with the NBA. That's why they have a huge salary cap, despite poor viewership. TV deals, and that's what does it. But in the Major League Baseball, a lot of it is based on fans and attendance. And a lot of people, they can't afford to go to games anymore. That's why baseball is such a long season. Unlike most sports, baseball's original season, 100, I'm just giving you all this for background so you can understand my point, was 154 games. And that was like in the 1900s. Now it's about 162. It's not really much longer. It's not like the NFL or the NBA or in football, they used to shut down the season in November. But anyway, here it is. Look at this. He says many teams don't even spend 50% of their revenue on their roster anymore. And I think one of the reasons is baseball, it's a fixed cost. And they know the revenue is very fragile. And that's why they're not doing it. And look at this. It's not just anywhere. Look at this. The Yankees spend 40% of their revenue. They used to spend 55%. And so obviously, he says we have to have a competitive commitment, but you can even tell the Yankees are spending less amount of percentage on their revenue. And this is very misleading. They say the Dodgers, but you have to remember they're deferring a lot of money into the future. But yeah, if you look at it, and that was what really caught my eye is let me see the Yankees thing. Is that where is it? The Yankees spend 40% of their net, and they used to spend 55. So you can tell it's not just small market teams, but a lot of these teams and baseball, they have more of a concept of what the consumer is going through because it's funded through people going to games, much more so than any other sport. And so I think that's why they're not spending. They see the consumer, they see how people can't afford to go to games anymore and the refreshments, and they're not committing as much money. And so that's why I think to do it. I think the owners, baseball owners, which is more dependent on the consumer than, NFL, which is dependent more on corporate advertising. So that's first. The other thing is, look at this. U.S. companies are increasingly falling behind on their debt. Corporate bank loans jumped to 29 billion. Interest, this is the highest in 8 years. Now it does exclude loans from direct lenders and private credit funds, but you can tell corporate loan, it's not just low income anymore. For now, the market, one of the reasons the market's going up is because they think that the wealthy consumer is not effective and that the wealthy is going to make up for it. But what they don't see is over the next couple of years, the wealthy are going to start feeling this. It's remember, trickle up poverty is what's coming. So, of course, credit card debt jumped by 45 billion, another record. Uh, Let me see. And you just look at it, 2020, and it just skyrocketed. 430 billion in 3 years. And here's the thing, it would have been much higher, but rejection rates are at a 12-year high. So, and rejection rates for on credit cards are skyrocketing. So, rejection rates, then defaults. And I also think this is a precursor. I'm going to end with this to the housing market in general. It's going to talk about DC, but I'm going to do that tomorrow. But 10 cities where rents are declining rapidly. And here's the first one, Nashville, Tennessee. There's an exodus there, and I think the housing market's going to fall next. Dallas, Texas. Texas, that is one of the first dominoes to fall. Texas and Florida. Denver, which, yeah, it was absurd. They had like where I live type prices. I was going to take a job, and here's another one, Austin, Texas. Uh, Birmingham, Alabama. Memphis, Tennessee. Nashville, so Tennessee. San Diego, which, yeah, that doesn't surprise me. California, a lot of people are leaving. Eventually, the prices. Atlanta, of course, Miami, Florida's on that big thing. So you're seeing San Antonio, Texas. So Texas and Florida, what makes it mostly. But you're starting to see rent prices fall a lot, and that's because the consumer doesn't make much money and they can't afford higher cost. They can't afford higher rent. And as you can see, there's a couple, but it's going to start to trickle. It's going to start with Florida and Texas, and it's going to trickle the other ones. And it's going to be big. So, anyway, that's all I have for today. Hit that like button, subscribe if you haven't, and I will see you next video. And also remember the disclaimer, nothing should be construed as financial advice.